This question is about value-added tax, VAT. The question has been adopted from CPA question of December 2021. It reads as follows. The following transactions were extracted from the books of Sabaki Enterprises for the month ended 31st August 2021. The company is registered for value-added tax, VAT, and deals in electronic appliances. The first transaction is on 2nd August. Purchased 16 digital television sets from Dubai Limited for 58,000 each. Now, this is a purchase and therefore it results into input VAT. On 2nd again, sold 4 video cameras to the Ministry of Tourism for 72,500. Sales result into output VAT. Paid audit fees to Hekima and Associates, Certified Public Accountants, CPA of 34,800. This is a service which is received, therefore input VAT. Sold digital television sets on 5th, 8 digital television sets to Mambo Restaurant in Uganda for 135,000, and this is output VAT. Purchased 10 slide projectors for 104,400 each from Info Tech Limited. This is purchases, therefore input VAT. Purchased office stationery for 17,400. This is also input VAT. Sold 4 flash bulbs that had a cost of 420,000 for 116,000 each. This is sales, therefore output VAT. Mambo Restaurant returned 2 television sets and was issued with a debit note of the equivalent amount. This is return inwards. Return inwards is opposite of sales and therefore input VAT. Paid electricity bills amounting to 4,600. This is input VAT. Sold 8 television sets to a local customers for 104,400. These sales, therefore output VAT. Sold slide projectors for 232,000 to Umoja Communications Limited. These sales, therefore output VAT. Paid 58,000 for repairing the director's vehicle. This is input VAT. Purchase electronic appliances from local suppliers for 1,160,000. Input VAT since it is purchases. Paid water bills for the month of 21,600 in cash for water supplied by County Water Services Board during the month. This is exempt service, or this water is exempt. Supply of piped water is not VATable, therefore that will be exempt. The above transactions are stated inclusive of VAT at the rate of 16% where applicable. So we are required to determine the VAT payable by or refundable to Sabaki Enterprises Limited for the month of August 2021. And the question is 10 marks. When we approach such a question, we need to understand that this question requires us to prepare VAT account. And for us to prepare VAT account, we must know the format of VAT account. I would like to illustrate the format briefly as follows. that a simple VAT account looks like this. It begins by first knowing that we have input VAT and output VAT. And after having the input VAT and output VAT, on the side of the input VAT, we have the following: a balance brought down, which is over declaration of VAT in the previous period, then VAT on purchases, VAT on bad debts written off, VAT on sales return. Then on the side of output, we have under declaration of VAT in the first period, that is a balance brought down. In the previous period, if there was under declaration of VAT, and that is the opening balance, then VAT on sales, VAT on purchases return. And after having these, then we balance off the account. Upon balancing off, we may have VAT refund or claim in case input VAT is greater. In this case, input is greater. In this case, it means input VAT is greater than output VAT. In that case, we have a balance, which is a refund or a claim for refund. And in case the output VAT is greater, then we have VAT payable. This means output VAT is greater than input VAT. What we may need to understand is what is input VAT and what is output VAT. Input VAT, majorly VAT resulting from or VAT paid when acquiring input. Paid for inputs. VAT paid for inputs. While output VAT is VAT collected from customers. VAT collected from customers. That is how easily we can understand input VAT and output VAT. Now, this question requires us to prepare VAT to determine the VAT payable by this company or VAT refundable to this company. And for us to do that, we would be required to prepare a VAT account like this. It is necessary, therefore, that when a student wants to answer this question, they must understand the provisions of the VAT Act that talks about the determination of VAT, talks about input VAT, output VAT, talks about the various items which are exempted from VAT, the various transactions which are VATable either at 0 rate or a standard rate, and so on. So that then invites a student to look at the second schedule and the third schedule of the VAT Act Cap 476, and also the fifth schedule, so that they can understand whatever whatever supplies are exempted from VAT, whatever supplies are VATable, either standard rate or at 0 rate. We are going to answer the question as follows. Sabaki Enterprises Limited VAT account for August 2021. So every side we have a date. We have a column for details, then amount, date, details, amount. Let's begin with the first transaction. We begin with the first transaction, which is on 2nd, and we are told that on 2nd of August, purchase 16 digital television sets at 58,000. In this case, we need to determine the total purchases by multiplying 58,000 by the number of television sets, which is 16. So we are going to have 16 multiplied by 58,000. And that is 928,000. So this is purchases on August 2nd. We have purchases is equal to 928,000 by 16 over 116. By 16 over 116. We multiply this by 16 over 116 because in a case whereby the transactions are inclusive of VAT, then VAT is determined as value inclusive of VAT, or the price inclusive of VAT, times the rate of VAT divided by the rate of VAT divided by 100 plus rate of VAT. So this is what we apply by the time we are calculating VAT in case the value given is inclusive of VAT. Therefore, in this case, we're going to have 928,000. We multiply that by 16, divide by 116. And that is a total of 128,000. 128,000. On second also, solve for video cameras to the Ministry of Tourism at 72,500. They are each. So we have 4 video cameras by 72,500. Now, being that this is a sale transaction, it results into output VAT. And therefore, we are going to have on August 2nd, and therefore we are going to have on August 2nd, and therefore we are going to have on August 2nd, and therefore we are going to have on August 2nd, sales, which is equal to 290,000 by 16 over 116. 290,000 by 16 over 116. And that is equal to 40,000. 40,000. The next transaction is on 4th August. Paid audit fees to Hekima and Associates, CPA. This is input VAT. This part of input VAT. So on August 4th, audit fees is equal to 34,800 by 16 over 116. So we have 34,800 by 16 divided by 116. That is 4,800. On August 5th, sold 8 digital television sets to Mambo Restaurant in Uganda for 130,500. In that case, we're going to have 8 multiplied by 130,500 each, and that is equals to 1,044,000. However, this sale, first of all, it is output VAT, so it appears on the side of output VAT, but it is 0 rated because this is export to Uganda. Exports are 0 rated. Therefore, we are going to have on August 5th, we have export to Uganda, which is equal to 1,044,000 times 0%. And that is going to be 0. That is 0 rated. On 9th August, purchased 10 slide projectors for 104,400. That is purchases, therefore input VAT. That is on 9th of August. Purchases. And this is also going to be equal to 1,044,000 times 16 over 116. And that is equals to 144,000. On 10th, purchased office stationery at 17,400. That is input VAT on 10th, stationery, which is equal to 17,400 times 16 over 116. So we have 17,400 times 16 over 116. That is 2,400. 2,400. On 12th, sold 4 flash bulbs that had cost 420,000 for 116,000 each. So in this case, we are going to have 116,000 by 4 because each of the flash bulbs is 116,000. That is going to be 464,000, and it is sales and therefore output VAT. That is on 12. So on 12, you're going to have sales, which is 464,000 multiplied by 16 over 116. And that is going to be equal to a total of 64,000. On 16th August, Mambo Restaurant returned 2 television sets and was issued with a debit note of equivalent amount. So when this person returned the television sets, they are supposed to be refunded. In this case, they were issued with a debit note to show that they have returned. And what is happening in this case is that when we make sales, or when we made sales of the television sets, which was considered to be export, they were recorded on the output side. Now they are being returned, and therefore they should be recorded on the input side. So on 16th August, we have return inwards. But because these were exports, when they are returned at 0 rate. Therefore, we are going to have the 2 television sets. Remember, when this particular television sets was sold to Uganda, each was sold at 130,500. So it is 130,500 now by the 2 which have been returned is equal to 261,000, but 0 rated. So by 0 rate, and that is 0. 0 rated transactions are also VATable, and therefore they must be shown, only that they are shown at the rate of 0. On 19th, paid electricity bills amounting to 40,600. This is also input VAT. So on 19th, we have electricity. On 19th, electricity, which is equal to 40,400 times 16 over 116. $40,000 times 16 over 116. 40,600. 40,600. 40,600 times 16 over 116. That is equal to 5,600. 5,600. On 21st August, sold 8 television sets to local customers at 104,400 each. So those are 8 television sets. This is a sale, so it is output VAT. Therefore, that is on 21st August. We have 104,400. That is multiplied by 8, and that is sales of 835, 200 by 16 over 116. Should be equal to 115,200. 115,200. The next one is on 24th August. Sold slide projectors for 232,000 to Umoja Communications Limited. That is also output VAT. So we have sales of 232,000. So we have 232,000 by 16 over 116, and that is equal to 32,000. On 28th August, paid 58,000 for repairing the director's motor vehicle. That is input VAT. So on 27th, we have input VAT, which is related to repairs of motor vehicle. And that repair is equal to 58,000 times 16 over 116. Equal to 8,000. The next one is on 28th August. Purchase electronic appliances from local suppliers at 1,160,000. So that is purchases, therefore input VAT on 28th. Purchases 1,160,000 times 16 over 116. So that is 1,160,000 times 16 divided by 116. That is 160,000. 160,000. Lastly, we have paid water bills for 21,600 in cash for water supplied by the county water services during the month. Now, this particular transaction is a transaction which is exempt from VAT. So we don't add it to the VAT account. I would like to clarify something here that I never explained, but used it, that there is this first transaction. Now, this first transaction, I never treated it as import because we are not told this is import. We are only told Dubai Limited, but we don't know whether this Dubai Limited is a company in Dubai or it is a company in Kenya. So without being told that it is a company in Dubai, the name Dubai Limited alone do not mean that these items were bought from Dubai. So we can assume that they were just bought from Kenya, unless we are told that they were imported from Dubai. Now, after preparing the VAT account as this, we need to balance off this VAT account, thereby determining whether we have VAT payable or VAT refundable. In this case, we have VAT claim refundable. So on 31st January, on 31st August, we have VAT claim, and VAT claim is the difference between the two sides, the total for the two sides. The side for the input VAT is greater, and the amount is 452 800. The side for the output is 251, 200. So the difference between the two sides is therefore equal to 201, 600. And that is the VAT claim for refund. So we have 452, 800. So the VAT claim for refund is equal to 201, 600, which is this figure. And that is how to prepare VAT account.